The last part to question 3 focused again on Unit 4, Topic 7 analysis. And this time it was what to do with the creditors' turnover. So the expectation was the creditors' turnover would go from 28 to 37 days. So on average, what does that mean? It means that whatever our average creditors are, and we don't know in this question, but the point is whatever they are, we're going to take, we at the moment take 28 days to pay them back. And what we're expecting to happen is that would go up to 37 days. So that's going to take, or we're going to take longer to pay back creditors. So generally if the trend goes up, so if we go up from 28 to 37 days, so on average creditors are being paid back an extra 9 days. The following general points that we could note about these being about positives and negatives. So negatives are, depending on the credit terms, and we weren't told, so it's okay for you to assume that this business does get discounts. If we're taking longer to pay creditors, we're presumably going to get fewer discounts from creditors, and that'll decrease our profit. Secondly, we might have a bad relationship with suppliers, and that might mean that they stop selling to us, or maybe they increase prices, or they don't let us buy on credit. Perhaps they increase delivery fees. So these are all negatives that we could talk about. On the other hand though, we have a couple of positives. One is we're keeping cash in the business longer, which is better for liquidity, because creditors aren't the only liability we have to pay. We have to pay a lot of things. We have to pay wages, we have to pay the rent, we have to pay insurance. And now that we're taking longer to pay creditors, that means we've got 9 extra days with that money to pay back some of those other things. And also there's now less pressure to sell stock and collect the cash quickly. What we're talking about is the cash cycle. Now I've got 9 extra days to, hopefully when we pay creditors back, that's with the money from the stock that we actually bought from them. So we managed to sell the actual goods that we're paying back the creditor for. And now that that's taking longer, that means we've got less pressure to sell the stock and collect the cash quickly, which is the definition of the cash cycle. Looking at the results, pretty well answered. So 46% of the state got 2 out of 2. And we just needed 1 positive and 1 negative. The examiner's comments, one was some students indicated that Metro Cosmetics might be charged interest by creditors. This is not normal business practice. Not sure I agree with that, but that was the comment. It didn't mention that they do charge interest, so I guess you can't assume it. But then on the other hand, it doesn't say that they get discounts, but you can mention that. So a little bit odd, but maybe avoid talking about charging interest when it comes to debtors and creditors. Some students also misread the info and looked at it as the business was actually going to pay back creditors quicker, and obviously the question was the opposite of that.